So what we're going to do is we're going to have a very quick introduction of each of the panelists. We're going to start off with Patrice, and then we'll get into the questions.
Hello, everyone. I'm Patrice Bonfilio. I'm the CEO and co-founder of Iris International. I created the company after being an allocator and investor for 20 years so that I could deploy my own capital into healthcare and try to create an entire ecosystem to address issues in the industry.
Good morning, everybody. For those of you that don't know me, I'm Rick Shankman. I'm the president of Harpia Capital Group. We are a global investment banking group, and I'm also with Insignia Financial Group, which is a family office out of Miami, which today is the largest portfolio of investors in Latin America.
Thanks, Rick.
Thank you, Keith.
Good morning, everyone. My name is Dr. Yana Leonova. I'm the venture partner at VNTR Capital. VNTR Capital is a community of investors registered in Delaware, but we run our chapters in over 40 locations worldwide. We have over 5,000 members, and that's how we do our co-investments and how we have a great access to various hot deals.
Good morning, everyone. I'm Valentin Ancuța, creator of 12 years ago, I founded the OxyHelp company. We specialize in manufacture hyperbaric chambers. So far, we have delivered over 3,000 units worldwide. And with the current life tech product, we're redefining a new category in the wellness and spa, longevity, hyperbaric, and other embodiments in the same session.
So I'm Paul Jaminet, founder and CEO of ANGX. I'm a four-time entrepreneur founder, also a two-time managing member of SPVs and investment vehicles, and I've been on the receiving side of many such investments. Thank you.
Good morning. My name is Bartolomeo Acquaviva. I work for a Swiss family office. They are the founders of, the UBOs are the founders of Partners Group. My background is insurance, investment banking, across my career. Thank you.
Good morning, everyone. My name is Pedro Guerra Alves. I represent PGA Consultoria. We started in 2002, and we work with more than 1,000 families. And we are putting together co-investments on real estate and hospitality. My background is similar to Bartolomeo, and we both come from Portugal now. So,
but I'm Italian. We didn't qualify for the World Cup, so please, respect.
5-0.
Thanks for the introductions, everyone. And I'm going to start the first question with something I think with optimism. Pedro, I'm going to start with you. What is one off-market opportunity you had this year that turned out to be a very good or very wise decision for you?
That's a very good question, Keith. Many people have asked me, because I attended the event since the 7th edition, how does it work for me? And it works on the capacity to attract off-market opportunities. So we only work off-market, and the families actually come to us to structure the deals. So we structure the capital stack around real estate opportunities, and we have the power and the connections to develop in the best way. So we have Trofaria, which is Lisbon South Bay, getting very popular and getting ahead of the curve. So when people are looking to things, they look to the newspaper. We prepare the news before the newspaper.
Thank you.
Now it's my turn. So our investment philosophy is mostly to focus on capital preservation. And when we do co-investments, we look at investments for a large percentage of our portfolio that are decorrelated from the traditional financial markets. So an example of a deal we did, we co-invested with in a consortium, and we bought a life-saving policy book in runoff. The name is Viridium, so it's a German insurance company. And the leading underwriter was Allianz. So basically, we operate in the insurance space, which is a very, very complex space, and we do this type of investments, which are eventually decorrelated from the rest of the markets.
Thank you.
The deals I've been involved in are situations originally created to help my friends and family invest in companies that I was involved in as an entrepreneur. So including AngieX, I have a friends and family SPV, which has a board seat, and it's been very valuable for my friends and family to have an insider who knows the company, helping them navigate the space. So it can be, it's definitely very helpful to have board representation and to have an ability to negotiate as equals with larger investors. And it's important to have inside knowledge about the company and to be up to date on what's going on. So there are a lot of pitfalls in private equity investing. If you're small and you're disengaged, then you can be in a disadvantaged position relative to some of the other investors at the table.
Valentin.
Sharing the mic. Yeah, the best deal that I believe recently came to me was it was an audit. Usually you pitch the client. The client hired an auditing company. They send engineers actually at the factory to check the product, certificates, everything. They basically grilled us for 2 weeks, purchased the chamber. Then he asked for a chamber for the squad of Portugal team during the preparation, and then another chamber that we sent for the hotel in Palm Springs, where the Portugal team is located. It ends up that being very happy. This is Cristiano Ronaldo. He agreed to be on a Netflix episode featuring our chamber. So turned out to very good.
Thanks. Dr. Yana?
One of the recent deals we managed to co-invest, it was actually ID.me. It's a quite famous digital verification platform in the US, and it's used even by the government. So it was quite difficult to get an allocation, but because one of the syndicate is also our member, through the syndicate we got some allocation and we raised funds within the community and co-invested through the syndicate. We were almost close to raise funds for Prometheus. This is one of the companies of Jeff Bezos, but unfortunately we got allocation quite late. It was a little bit short notice and quite a high ticket, so we did not manage to close it on time. But I just wanted to show you which type of deals we get access to just because of our members.
So Keith, from our side, the deals that we get are basically, private deals when we're working through with our clients and partners. Ikaru Media Group is one of the best opportunities that we've seen so far this year. It's over $150 million investment with capability to make hundreds of millions of dollars investments in the next few years in technology innovation, AI, and media. We're also looking, because of the situation of the markets in Brazil, the agricultural sector has done really taken a hit, and one of the biggest, the biggest sugar operator in the world has gone under, and that's also a deal that we've been very much involved into. That I think it's one of the best potential opportunities of the decade for Latin America. The other side, which has been a very interesting topic here for the last couple of days. It's in artificial intelligence and data centers. So we have seen a lot of those deals come through. We believe, like everybody else, it's a huge undertaking, probably the biggest investment of humankind today, of our history, but that we're taking on collectively. Just this year in the United States, it was over $800 billion investments. And I think that will continue to grow. And you're talking about trillions of dollars of investments over the next few decades. So anything from infrastructure, supply chain, to data centers real estate, warehouse, energies, all the way up to the softwares that will go into to supply the next layer of technology innovation. I think those are amazing opportunities, and I think we can look at it for the next decade, 8 years, 10 years, 20 years, and I'm sure we'll be able to mint many billionaires over time. So we're looking to take a lot of that from the Brazilian perspective, from the US perspective, and from the Middle East perspective. And I think we're very well positioned because of the cost of energy and infrastructure to be able to pull this off. And I think at the end of the day, we should all be able to enjoy much better returns, longer deal exposure, but at the same time, I think we'll have an interesting new world out
Thanks,
there.
Rick. Yeah. Thank you.
So the best co-investment that we had in the past 6 months is a company called Alianza Global. And it's healthcare, but international healthcare, especially austere environments. So when you think about what will be an enduring sector where you can put dollars into and for the foreseeable future, be able to fine-tune it, send dollars, train staff, and be able to deploy them globally, the international medicine field is huge. The distinction here was that there was already an outfit in Dubai and also in Saudi Arabia. This particular company is now focusing on different regions, and we've already been able to secure a contract. We want to bid with Cameroon for a sizable deal. So we are now deploying into that country within the next 12 months to finish all of the offerings. And it has allowed us to bring some of that expertise in an austere environment even to the United States. So there are rural areas, there are healthcare deserts. So if we're building an ecosystem of healthcare companies, then that's the way to do it, to really take and being able to extract the best elements of one of the companies in your portfolio and be able to leverage that with others. And we found that the relationships developing between the founders has actually been quite helpful in deal flow as well. They always have a window into what's next in their purview and share it.
Thank you, Patrice. So I'm going to summarize just this last question set that tying in also for those who just came in to what Brian presented a little while ago, that oftentimes the best co-investment deals is because of a trust relationship. And in some cases, as Dr. Yana was talking about, was memberships. And so I think that's something pretty powerful. I think everyone kind of answered that they had access to something that other people didn't have because of this trust relationship. So I want to also piggyback on what Rick and Dr. Yana were saying, that yesterday somebody asked me when I made a comment on stage that B2B SaaS companies, I predict, will have a tough time over the next several years as software becomes easier to customize and do on your own. And you can literally create applications for your own needs that people paid a lot of money for in terms of a package. I bring this up because infrastructure is a really big play. And so then the question is, well, how do you trust that? And in Silicon Valley, we have this recurring theme that we're putting the silicon back into Silicon Valley because we've been an application-focused economy for a couple of decades. And so I think that becomes important. The question I have is, how are you going to decide what is signal and what is noise? How do you actually know when an opportunity comes to you that's a legitimate opportunity or it's been recycled, it's being passed around? And I'm going to start back with Dr. Yana.
Thank you for this honor. Yes, for us, for community, first of all, we rely on trust. And within our community, we are very selective. So each member going through the certain process, and our team in the US checking, doing the proper due diligence, and then the person or the company is accepted to our community. And so, of course, once we only receive deals within our community, and our members are co-investing and co-raising within our community. And if we see that the deal is coming from one or two members at the same time, then there are two questions. Either this is a really very hot deal and our members have a particular access and allocation, or it's something that's now starting buzzing around and they're just missing capital because they just kind of failing company or something around this. So of course, in this case, we just continue our search, continue our due diligence about the company, about this opportunity that is coming up. And then we have an investor committee, and we have our, I would say, top performing investors, and we just discuss it internally. Shall we start raising, syndicate, and promoting the deal, or we just skip it and look for another opportunity?
Thank you. Valentin?
As you mentioned, yeah, I would say trust is the first that defines the opportunity to go for a deal. I mean, when I feel a sense of emergency or something, that it's a big question mark for me. It just happened that the owner of the company heads up that we work closely to develop an agent AI behind our product. It's a company that's been around for 6-7 years now, so they can get data for all the variables on the market, and then they're developing an agent AI. It just turns out that recently a major investor is one of our clients in Miami with a spa that has 2 of our units. So this kind of partnership that help us to develop adaptive AI protocols. We have now in the LifeTech product, we have over, I would say, 8 or 9 modalities. We're talking about hypoxic training, far infrared, red light, brainwave entrainment, PEMF, along with hyperbaric oxygen gradient. So this partnership that we build in developing this agent AI would help us to create adaptive protocols. So all these relationships came from trust, from knowing our product and knowing our clients.
Thank you.
Yeah, definitely. There's, you know, of 2 ways people make decisions. Who do I believe? Who do I trust? And what do I believe in? You know, often the who do you believe and who do you trust is the more essential one. You know, a lot of people will make investments just based on, I trust this person and I trust this person to pivot to a different what, if that's appropriate. And, you know, whereas even if you believe in the what, you may not believe in the who. And so trust is usually critical and as a practical matter in a lot of these investments. And, you know, so that gets from the investor side to the question of deal flow. You know, how do I work through a trusted network to get appropriate deals? And I think, you know, that's, you know, part of what conferences like this are meant to facilitate. So, you know, there's no easy solution. It usually takes a lot of work to connect good opportunities to good investors.
Well, when we analyze co-investment deals, we look at potential red flags, and I can give you 5 examples. For example, the first one is the credibility and the expertise of the leading underwriter. The second one, the presence or potential intermediaries. So we don't like to deal with intermediaries. The third one is when the leading underwriter focuses more on the upside of the deal and less on the risk, then we get worried. And then, very important, you know, we make phone calls to check, you know, the quantity of shopping around, and you know, how many times have this deal, you know, been shown in the market. I think, how many red flags did I say? 5?
Oh, Bartolomeo,
Yeah,
you can actually tell that you come from the insurance industry. It's actually...
Yeah, but that's about it. So the last but not least, the most important is alignment of interest. So skin in the game and being focused not on fees, but on return on the investment. The most important one, I have to say.
Yeah, how many people think about this? All business dealings is actually risk management. You're trying to manage your risk and push risk onto the counterparty. So I think that goes back to when you have a mutual relationship to benefit each other. I think that becomes very important. Pedro.
Well, as you probably noticed, I wear jewelry from my grandfather. So we are very traditional. I'm in real estate and gold. It's gold bars, to be very specific. So for us, the real estate deal that we take as a co-investment is always as a developer. not as an operating. And so we focus on the acquisition price of the plot. And we only present to our co-investors once we secure the financing of 70% of the construction cost, and we secure a closed budget. In Portugal, we have something called errors and omissions, which means that established construction company will quote a price that they will make sure to deliver on a turnkey project. So we know from the day one, when we form the SPV, we know exactly what is the end cost, and we know exactly the market price. So we have the investors together on a solid base. I come from asset management, and my clients are very risk adverse. So that's how we select the co-investment opportunities.
Thanks, Pedro. Patrice?
Yeah, so if the question is how do you make sure you're getting that first look and not getting a deal that's been shopped around, for us it helps to be in a singular sector. So the depth of those relationships is huge. Also, understanding the finance and the capital side makes a lot of sense. And really it's the reputation of what type of investor you are. I come from the shareholder activism background, so I'm not everyone's best friend, but at the end of the day, every company that I've ever had an activist relationship with will speak highly of me and what I can do and help when there's problem solving to be done, when there's introductions to be made. So that should lead them to you if they know more about what you're offering them, and then you're gonna get that first look instead of another company.
Thank you. Rick?
Yeah. So I could spend hours talking about this.
You don't need hours, just
I'll try to
clip.
make it in a few short minutes. So we've built, between myself and my partners, over 50 years worth of experience in the financial space where we are cross-border between Brazil, US, and the Middle East. We have great friends. We depend on our friends. We listen to them. And we bring in the deal flow that we are looking at, that we create our own thesis. We like the sectors. We understand where our partners and clients are. And to give you a simple example of what's happening with us here this week, we brought Paul from Icaro, that his partner, Louis, is a family friend of my family for about 50 years. We have been doing business. He sits on my board. I brought in some of our guys from Brazil to sit on their board, and then we developed a relationship, and now we've been put in a position to be able to make the investment in the company as well. So we always look for trusted relationships because nothing is 100%, but it's how you relate with each other and how you're able to build the businesses going forward. And the sugar business that I spoke about, it's another childhood friend of mine that ended up buying that business after going basically bankrupt, and he's restructuring that company, and it's a huge operation for Brazil as a whole. It's probably about $15 billion in debt, maybe a little bit more, on a $10 billion investment, whole infrastructure, what have you. So it's always about the relationships, and somehow it's not always the same people. It fluctuates around the same people. So we all know each other. We can all pick up the phone and understand. We all see the flow. And, we're looking, if we're not in the first position looking at a deal, Keith, we're not looking at a deal. We will help, we'll support. Like I'll give them all the contacts, the relationships, what have you. But for me to really look at a deal, I'm in the first position to be able to make the investment, to bring our investors in. Otherwise, it's not worth it for us.
Thanks, Rick. And I think it goes back to the trust network and the network that you're cultivating. I'm going to go back to Bartolomeo because I think you're going to have the most structure to start off with. What is your go-to preferred structure or vehicle to get into a co-investment relationship?
So I'm the first one, huh? Yeah. Okay, this time.
I think because since you come from insurance, it's going to be the most
I
structured.
give you an example. The other thing we do is we do natural catastrophe reinsurance. So we have a team of underwriters. And if you look at the industry, you have two asset classes. Either you buy these nat cat bonds that I don't know if you ever heard about it, that reinsurers issue in the market in order to increase their underwriting capacity. So it's a regulatory play. It's an arbitrage because they pay less than they should and people don't understand what they're buying. Or you partner with leading reinsurers like the Swiss Re of this world, and you enter into what we call sidecar reinsurers. So basically, these are vehicles that are structured in order to basically co-reinsure with these guys, and with the same risks, with the same, again, alignment of interests, and we're basically not, how do you say, discriminated, okay, in investment. So basically we team up with this type of vehicles with leading reinsurers that know what they're doing, we know what we're doing. And to give you an example, everybody's talking about climate change. Climate change, people say, oh, natural catastrophe, hurricanes, oh, stay far from it. Not at all. It depends on how smart you are when you underwrite risk. For example, you have peak perils and secondary perils. So you want to stay away from secondary perils when you underwrite. What's the difference between peak perils and secondary perils? So basically, a peak peril is that when there is an earthquake and the building collapses. That's a peak peril. You have to pay for the reconstruction of the building. What's the secondary peril? Secondary peril is if there is a hurricane and then the electric wire falls on the floor and causes a fire and it burns 20,000 houses. These are secondary perils. We don't touch that. That's why when the California, fire happened, we paid zero. Okay? Thank you.
Thank you.
I'm sorry, what was the question?
You don't want to buy an insurance policy? This is the question.
Vehicles, yeah.
Is there a preferred
So-
structure that you have?
Yeah, I'm familiar with special purpose vehicles in the US, so they're often limited liability corporations. And I think Leila raised the question earlier about tax treatments and regulatory treatments. And so, yeah, many non-US investors, it doesn't make sense to participate in such vehicles because of tax treatments, or even German banks won't allow money transfers to US partnerships or SPVs. So there's definitely issues. Usually those can be worked around with some, you can deal with the complexities if not every investment has to go through the same intermediary. You can use a different structure for different originating investors. And what we've done with AngieX, we have a US SPV that assembles investments from small investors in the US, but we bring small investors from abroad directly onto the AngieX cap table. So, there's usually a way to work around the regulatory or tax complexities, but it can take a little bit of effort.
Thanks, Paul. Valentin.
Yeah, talking to Pedro here 2 days ago, he opened my eyes towards how we should structure the investments in the company. So initially, I was probably looking like we put everything in one basket, but now I do believe that the investment should match the asset. So that's why we can separate residential, why we want to build like residential for our employees, that we get it more stable. So it's the issue with the labor. And then another investment would be co-investment in grants, for European grants for expanding the manufacturing facility. None of these two require share dilution. And then with the share dilution, probably looking at a LifeTech product and expanding and getting the LifeTech product, especially in the health and spa longevity, where it can actually replace 6 different rooms, 6 bookings, 6 operators, but we have to do that fast.
Thanks, Valentin. Dr. Yana.
Deal structuring is not really my duty or my strengths. In general, only investors who already invested in the deal can offer it to our community, to our investment committee. Then we look at this, as I said, discuss internally. And then the investor usually has his own SPV already. So it's kind of his costs. We just have an allocation within this SPV, we raise within community, and then usually we have admin fees between 3 to 5%, and carries between 15 to 20, and we split it depending on how much investment we brought, what's the project, and so on and so on. So that's how, in general, it is structured with us, with Vintiara.
Thank you. Rick.
All right, so our experience in the structuring, everything changes all the time. It evolves. We're very much concerned about governance. We spend a lot of time on governance on each one of these companies or on the funds that we work with. So we can go from special purpose companies, we can go into funds. We do have teams that work with trusts and foundations as well for the private investments. And it depends on so many different factors that we certainly suggest that, you know, having always an attorney and an accountant with you or with the teams to really discuss what is the best potential structure for your deal. So, you know, when we are in Europe discussing European deals, they like European structures. When we are in the US, they like the US, Canada, island structures. When we are in Latin America, they like Uruguayan or the islands. So everywhere is different. It's about the comfort zone for the investors. From our perspective, we're very open to looking at all kinds of different structures, as long as it makes sense for our investors.
Very good insight. Thanks, Rick. Patrice.
Yeah, I'm probably one of the few people that actually likes having those conversations with all the tax teams. I get really into it. To your point, it's different everywhere. You have to stay up on what is actually working for the investors in those jurisdictions. And I've done it every sort of way. I guess the only one maybe not mentioned was donor advised funds, unless you did it and I didn't catch it. But yeah, there's so many ways. So it's important to make sure your tax team is having those conversations, and from our side that we are nimble and flexible enough to make sure we're meeting the investor where they are.
Thanks, Patrice. And Pedro?
Well, in our case, I think everybody spoke about SPVs. Obviously, that's what we use. But the investment board that we put together is one of our savviest investors, is the president of the board. We obviously have our legal, our advisor in tax, which is business partner already for 12 years. And our legal, our lawyer has been working with us for 20 plus years. And someone very specialized on inspection. It's a very, very important element for every construction to be audited and inspected. And so we have one of the best players in the country. So this is how we put this together. And we are in co-investment, so I'd like to say a word about Brian McMahon for putting this together. The investment club is what co-investment is all about. I learned more about real estate, but definitely want to pick the brains of someone that knows how to co-invest in other areas that are exponential and that can make all the co-investment panel what it's all about. It's making money where people know how to. Thank you so much.
Thanks, Pedro. And I think that, as we wrap, is really the whole point of us being together at this really diverse group of investors and allocators and people that we can learn off each other. I mean, I'm certainly not a real estate expert, but I'm very aligned with what Brian and the work he's doing. So if you're just coming in early today, this morning Brian was talking about a membership group that we're going to be starting because we can tap into the expertise each of us have and make ourselves a stronger community. I really enjoy doing this particular panel at every conference because I learn a lot, and I think that as we continue to develop our tight relationships, we're seeing better opportunities to co-invest with each other. So thanks, everyone. Thanks, Anthony and Hadi, again, for giving us this chance to meet up several times a year. And I'm going to bring Carmelo back up. Thanks again, panelists.
Thank you, Ken. Thank you.